Well, yesterday's rally now seems like a short burst of positive sentiment as markets take a leg lower today with rising yields and inflation concerns weighing. But my next guest says there are opportunities in the two sectors, tech and home builders, that are falling on rising rates. And his value fund's performance is trouncing the S&P this year. Joining me is Bill Smead. He is Smead Capital Management Chief Investment Officer. Bill, it's great to see you. We've talked a lot about the home builders, so tell me about tech where you see some opportunities.
Well, in tech, we were looking for opportunities to avoid stock market failure. And you've got a setup here, Kelly, where the money is crammed into tech in three different forms. It used to be one form. It was tech stocks. Now it's technology, communication services, et cetera. And people are like lambs being led to slaughter in these high price to sales ratio stocks. We're not recommending anything in tech currently other than eBay, and we like eBay because it is the Rodney Dangerfield of tech. It never gets any respect.
Okay, that makes more sense though, because when I saw tech, I'm thinking to myself, that's not the Bill Smead I know. So to be clear, you still think there's a lot of room for downside. How much downside, and can markets continue to rotate away from tech and into the parts that you like without a bigger overall disturbance?
That's a wonderful question. John Locke, the great philosopher, had the law of fashion. I don't think investors really understand how important the law of fashion is to the way they invest, right? People like to be reinforced by knowing the people around them agree with them. Mm-hmm. And so just as a general rule, if you want to make a lot of money in the stock market over a long period of time, the best way to do it is in businesses that no matter how well they do, people never get very excited about them. Now, Facebook is working their way that direction. They might become the new Philip Morris, right? Philip Morris was vilified. The original ESG was taking cigarette commercials off the broadcast networks in the late 60s. And then Philip Morris got vilified, and they were the best performing stock in the next 40 years. So they're on their way to getting there, but most of them are not close to being vilified. At some point, Elizabeth Warren will have Occupy Palo Alto going.
Right.